Hey everyone, welcome to class. I'm your UITM lecturer, and today we're diving right into our MAF201 revision explainer. We've got some serious pastel aesthetics going on today, so go ahead and grab those virtual highlighters. We're going to take contract costing and make it not just understandable, but honestly, genuinely fun and colorful. Let's get into it. All right, so picture this. Imagine we're building this massive, gorgeous recreational park. It's going to take several years to finish. We're talking beautifully painted slides, lush gardens, the whole shebang. Now, as the contractor, we have to figure out exactly how to calculate our costs and profits for this huge project right now, today, right here in our GoodNotes-style digital notebook. So how do we actually track all that money over such a long period of time? Well, that, my friends, is exactly where the magic of contract costing comes in. Here's a quick look at our highly organized syllabus for today's explainer. We'll start with a welcome to contract costing, move on to some important terms to know, prepare the contract account, calculate the stage of completion, do a little practice with the SPJ illustration, and finally, wrap up with some crucial exam tips. All right, Section 1, welcome to contract costing. So what actually is contract costing? It's a specific type of costing used for those big, custom projects. Think about builders, civil engineers, or even shipbuilders. These projects are totally site-based, meaning the work is happening out there, at the park, not inside a factory. And they take a really long time to complete, often stretching across multiple accounting years. Because of that time frame, they involve a super high proportion of direct costs, plus we end up relying heavily on subcontractors to handle the specialized jobs. You know, all of this makes keeping track of materials and labor quite the challenge, which is exactly why we need a specialized contract account. Moving right along to Section 2, important terms to know. Okay, let's open up our vocabulary notebooks. First up is the Value of Work Certified, or VOWC for short. Now, as the contractor, we don't just magically get to decide how much work is done. We need an independent expert for that. You can think of VOWC as the official stamp of approval from the architect. It's literally the sales value of the work they've gone out, physically inspected, and certified. They're basically saying, yep, this much of the park is officially built to standard, go ahead and build a client for it. Next up, we have retention money. Retention money is basically a safety deposit held back by the customer, the contractee. So even though the architect certified the work, the customer holds back just a small percentage of that payment just to be on the safe side. If our beautiful playground has absolutely no defects after a set period of time, then we finally get that money released to us. It's just a great way to ensure quality control. Okay, Section 3, preparing the contract account. All right, here's your master cheat sheet for the actual contract account. Let's look at the left side first, the debits. This is where we record all the costs incurred for the project. So we're debiting materials purchased, wages paid, and the full original cost of any new plant machinery we bring to the site. Over on the right side, the credits, we record our closing balances and transfers. We credit things like materials left over at year-end, prepaid expenses, and this is absolutely crucial, the net book value of our plant. The difference between these two sides, that gives us our cost of work done to date, which we then carry down. Which brings us to Section 4, calculating the stage of completion. So how do we know how much of the giant aesthetic park is actually finished? We figure that out using the stage of completion, and we've got two main ways to do this. First, the output method. This one's based on the final product, relying on the architect's certified value divided by the total contract price. Then there's the input method, which is based on our actual effort. It uses the proportion of costs we've incurred so far divided by the total estimated costs of the entire project. Now, a quick heads up, your exam question will usually specify exactly which one to use, so definitely keep your eyes peeled for those keywords. Now, check this out. This is our golden rule from the accounting standard MFRS 15, and let me tell you, it is a massive exam point. If you're looking at your estimates and you suddenly foresee that the whole project is going to make a loss, you absolutely must recognize the full expected loss immediately as an expense. You don't wait around, and it genuinely doesn't matter what your stage of completion is. The prudence concept always wins here. Let's actually walk through a step-by-step calculation using the input method from our notes. Say our total contract price is, 10 million ringgit. First things first, we need to find our total estimated cost. We do this by adding our cost to date, let's say 2.5 million, to our estimated future costs, which is 3.2 million. That gives us a total estimated cost of 5.7 million ringgit. Next, we just take our cost to date, that 2.5 million, and divide it by the total 5.7 million. Multiply the whole thing by 100, and boom, you've got your percentage. And that gives us exactly 44% complete. Oh, a super vital rule right here. Always, always round off your percentage. No decimals, okay? So, because we're 44% complete, we can safely recognize 44% of our total 10 million ringgit contract price as our revenue for this year. That comes out to 4.4 million ringgit. See, when you break it down step by step, it's totally manageable.
All right, time for section 5. Let's practice the SBJ illustration.
Time to put down the highlighters and pick up those calculators for a real-life scenario. SBJ has a contract to build a 2 million ringgit playground. Now, this is exactly the kind of setup you're going to see in your finals. Just take a second to scan through the data here. Notice those specific details hiding down in the additional info? Like, for example, they mention the depreciation for the machine is 16,500 ringgit. They also point out that site expenses accrued are 16,000 ringgit, and our subcontractors have a prepaid amount of 6,000. We have to be really careful with how we treat these adjustments. So the most crucial part of the answer is seeing exactly how we handle these items in the actual contract account. Just look at the machine and equipment line. We debited the full 200,000 ringgit cost over on the left side. But then on the right side, we credited the net book value, which is 183,500 ringgit. You might be wondering, where did that number come from? Well, it's just the 200,000 cost minus that 16,500 in depreciation. Also, notice how we added the accrued wages and accrued site expenses on the debit side, but we made sure to carry the prepaid subcontractor fees over to the credit side. Balancing all of this out perfectly is what gives us our final cost of work done to date. And finally, section 6, exam tips and wrap-up. You guys are doing so great. Let's just wrap this up by looking at some common student mistakes. Please, whatever you do, don't fall for these exam traps. Number 1, always remember to add your accrued wages and expenses straight to the debit side. Number 2, deduct those prepaid expenses by putting them on the credit side. Number 3, and I can't stress this enough, always, always round off your stage of completion percentage to a whole number. And lastly, remember our MFRS 15 golden rule. If your calculation shows an overall loss for the project, you have to recognize that whole loss immediately. I know, contract costing can seem like a giant project all on its own, but really, just like building that park, you do it one step, one brick, and one calculation at a time. I promise, with the right mix of focused practice, tackling those past year questions, and of course, keeping your notes beautifully organized, I know every single one of you is going to absolutely crush this MAF201 exam. So now that you've mastered the ins and outs of contract costing, the real question I have for you is this: what incredible, giant projects will you go on to manage in your own accounting career? The skills you're building right here, right now, these are the exact tools used to build the world around us. Keep practicing, stay focused, and I'll see you in the next explainer.